This recording is for the income tax assignment. So there's a few things to figure out income tax, and your work will definitely have you do sections of it to find certain parts and then put them all together at the end. So the first one is adjusted gross income. An adjusted gross income is going to be the gross income minus any adjustments. Taxable income, so once we find the adjusted gross income, the taxable income comes from taking that adjusted gross income, or AGI, and we subtract any exemptions plus deductions. And then once we have that, to find the actual income tax that is owed to the government, we take that taxable income and we have to figure out the tax computation based on the table that they give us. And then minus any tax credits. So we definitely, for this part, need to use the table. Okay, so for example, if a man earned $53,900 in wages, he also earned $2,200 from interest from savings, and he contributed $2,500 to retirement. The personal exemption that he has is $3,400, and he has mortgage interest, which is $9,100, and gave some money to charity, $2,100, and paid state taxes, $1,600. And the standard deduction is $5,270. So we want to find his adjusted gross income. So to find that, we need to take his gross income, which is everything that he's made. So we need to take the $53,900. We also need to take in the $2,200 he made from interest, and the $2,500 he contributed to, no, sorry, let's undo that one. These two items and add them together. And so that gives us $56,100, and then we subtract the $2,500 that he paid to retirement. So that leaves us with $53,600. This would be his adjusted gross income. Now, to find his taxable income, we need to take this $53,600 and we need to subtract a couple things, but we have to add these two up. So we subtract his exemptions, and it said that his personal exemption was $3,400. And we need to also add to that his deductions. So this is where we compare the two. And so we compare this standard deduction versus all of this. And so whichever one is more money, then we take that one. So 5270 is his standard deduction, but he has 9100 plus 2100 plus 1600. That is going to be more. So we're actually going to subtract or add all of that in there because it's worth more money. So that comes to $12,800. Now we want to add these first before we subtract them. So we end up with 53,600 minus 16,200. And so his taxable income is 37,400. Another example, a single man with a taxable income. So here they've already calculated the taxable income to be $13,000 and has a tax credit of $2,500. We want to know what will he owe or what will he gain in a refund. And so this is where we look at the table. So you're going to have to go in your lesson and look at that table, or I think each problem actually has that table. And there's several things. There's a tax rate with percentages, and then there's columns that say single, married filing separately, married filing jointly, head of household. And so this one tells us that it is a single man, and so we're going to use those numbers. Now, what puts them at those different tax rates is how much money there is. So we want to break it up into chunks. So it says the first $8,700 is taxed at 10%. And we never use a percentage, we use a decimal. Okay? But we need to tax the rest of his money. So this is just taxing $8,700 of his money. We now need to know how much is left over. And how much is left over is $4,300. So now what happens is the leftovers, the $4,300, actually gets taxed at the next tax rate, which is 15%. And so we want to do those multiplications, and then we want to add them together. So 8,700 times 0.10 is $870. And then 4,300 times 0.15 is $645. And so 15 is how much he would owe for taxes. However, he has a tax credit. So now we take this 1515 and we actually subtract that 2,500 from there. So 1515 minus the 2,500 puts us at a negative $985. Now what does that mean? This means this is his refund. He gets money back. Okay, one more example. Unmarried head of household income, so taxable income, they've already determined the taxable income for you is no, they haven't. Let's undo that. Has 2 dependents. And so the gross income is $55,000. The deductions are $34,050 and $1,000. There are no adjustments, and tax credit is $1,000. So now on this one, we have to kind of put them all together. So first we need to find the adjusted gross income. Now remember, the adjusted gross income is where we take the gross income minus the adjustments. But in this case, they told us that there was no adjustments. And so our adjusted gross income is the same as the gross income, which is $55,000. Now we want to take that and we want to subtract any exemptions and deductions. Now on that same chart that you're given, it tells you exemptions per person. So this person is head of household. Each person exemption is $3,800. So this includes the dependents. So this means 3 people are getting $3,800. So we have to do 3,800 times 3 to know that the exemption total is $11,400. Now, again, we have to also compare this deduction versus the standard deduction. So here, $4,050 plus $1,000 is $5,050. If we go to the head of household column, it says the standard deduction is $8,700, and so we definitely want to use the $8,700 in this case because it's more. Okay, so we want to add the $11,400 plus the $8,700 first. And so we have $55,000 minus $20,100. And so that will tell us the taxable income for this person. So $34,900. So here's where we go to the table that they give us. So the head of household table says $34,900. We're going to be in the first and the second tax bracket. But notice the numbers are different than the last example. So it says $12,400. So the first $12,400 this person has is going to be taxed at 10%. And that means the rest is going to be taxed at the 15%. So we need to take $34,900 minus $12,400. So $22,500 is what's left over times the 15%. So $12,400 times 0.10 is $12.40. And then 22,500 times 0.15 is 33.75. And we want to add those together. And we get 46.15. So this is how much money this person owes in taxes. But we also have to remember that there was a tax credit of $1,000. So we have to subtract that $1,000 from here. So this person really only owes $36.15. Okay, so that's the end of this recording. Now, if you will call, text, or Skype message me, I can ask you a couple questions about this recording and you'll get credit for it. Have a great day.